Now across to Nigerian Stock Exchange. Adegboyega Olatunde, Managing Director at Primera Africa Securities, is standing by to give us a perspective on the day's trade. It's great to speak to you, Adegboyega, and I want to get, first of all, your perspective on the sentiment we are seeing for Nigeria's equity space. We've seen it move dramatically over the last few weeks. It's up 22% for the year, one of the top markets in Africa these days. Give us a perspective on how things have changed in your view with respect to investor sentiment.
Basically, Wole, over the past month, we've actually seen this Nigerian Stock Exchange rally by about 10%. So we're talking of from like August 16th to date, the market has actually done 10%. So a lot of the rally, a lot of the movements that you're actually seeing started from about August 16th. Now, why is August 16th important? August 16th is important largely because a few weeks before that, there was an MPC meeting where rates were held, net open positions were reduced from 3% to 1%, cash reserve ratios were also increased from 8 to about 12%. Now, what that ultimately did was that tightened liquidity, rates rose to about 5-year highs, and after that, rates substantially moderated. Now, that also generated a lot of increased interest in our market. Because of that, we had increased foreign portfolio investor inflows into our market. It stabilized the dollar as we speak. It also resulted in huge inflows into the fixed income markets. Now, because of those huge inflows, we saw a concordant decline in fixed income securities, in the yields on fixed income securities, where they declined by about 250 to 300 basis points. Right. So what you have now seen is a situation where you've seen asset allocation shift from the fixed income rates regime that was preeminent to the equities, and increased interest in our equities market as we speak. All right,
so fair point. We are seeing a shift of asset allocation. But how do you compare this rally with previous rallies? We've seen rallies in the past. 2010, we saw the market up. 2011, it was down 17%, so clearly not being sustained. Your thoughts on the change in the environment and why you think this rally is different from rallies we've seen in the past?
Okay, well, I basically believe the basic change we've seen has a lot to do with the structure of the market then and the structure of the market now. Foreign participation as we speak is in excess of 80% in our market. As at 2010, it was about 60-40 in favor of local participation. Now, you should also note that as at 2010, the CBN set a deadline for reduction in exposure to margin loans in banks' loan portfolios.
So there was a need for people to sell as a result of that. That's a fair point.
Yes. So we had to meet that deadline. So there was a lot of sale pressure in the market. So that resulted in it, and that deadline was set for September 30th. So the market actually substantially declined from about June when it was announced to September 30th. After that, we saw a concordant increase, a rally. We should also note that Dangote Cement, which accounts for about 15% of our market capitalization, was listed after that decline. So why do I feel it's different? Largely because the structure is different. There's renewed optimism. We've seen reforms by the CBN. We've seen reforms by the SEC, AMCON, power reforms, the petroleum industry bill. So basically, we're starting to see the effects of the reforms. So the structure then is largely different from the structure that we're seeing now.
Right. One of the reforms that is still coming up is market making, and that is taking off next week. Your thoughts on the impact that would have on this rally? Because some people are already pointing to the fact that that's one of the reasons we're seeing the market rally in the first place.
Yeah, well, true, yes. But as we know, it's still early days, so it's difficult actually to judge the impacts of market making. Basically, I'm of the opinion that, yes, it would increase liquidity and it would increase depth in our market. But like I said, it's still early days. Ideally, market making should take off by the 18th of September. So maybe a month or two after that, then we would actually be able to judge the impact. But in terms of positioning for market making, yes, I do believe it would have a positive effect on our market.
Okay, let's talk about where the market can go from here. Clearly, it has done very well, 22% year to date. We've seen the Naira strengthening, so even in dollar terms, it's actually better than that. Your thoughts on how far it can go? We look at some of the factors that we think would push the market further. We see things like power reforms. A lot of people excited about the changes we're seeing there. 2013 budget is likely to be passed in this year for a change. So clearly a few positives in the macroeconomic space, but your thoughts on how far this market can go?
Well, conservatively, I've estimated returns at 25% for the year. My opinion is based on the fact that do we expect this rally to be sustained over the short term? No. Over the long term, yes. Why? Largely, we still believe that there's still value in some of our equities, and because of that, though we believe that over the short term, the market might not rally substantially. We've seen a 10% return over the past month. Do we believe that it would moderate? Absolutely. But we still believe that there is value in securities in our market. So I expect a minimum of about 25% year on year.
Boyega, thank you so much for your thoughts. We obviously will continue to watch this market as it rallies, and hopefully that rally will be extended into next week. Adegboyega Olatunde, Managing Director at Primera Africa Securities, sharing a perspective on the Nigerian market.